You check your balance at the end of the month and something feels wrong. You weren't reckless, you didn't make any major purchases, you thought you had control. Yet somehow the money is gone. Not all of it, but enough to make you uncomfortable, enough to prevent you from saving, enough to keep you stuck exactly where you are. You tell yourself it's just a bad month, that things will improve, that you'll figure it out later. But next month comes, and the pattern repeats. The money disappears. Again, and you still can't pinpoint exactly where it went. This is not bad luck. It's not because you don't earn enough. It's because your finances have invisible leaks. Small, recurring expenses that you've stopped noticing, that operate beneath your conscious awareness, silently draining your resources month after month, year after year. Most people live their entire lives never identifying these leaks, wondering why they can't get ahead despite working hard and trying to be responsible. The problem isn't visible in a single transaction. It's visible only when you zoom out and look at the cumulative damage these tiny expenses create over time. Let's start with the most common culprit: subscriptions. Streaming services, music platforms, cloud storage, premium apps, meal kits, beauty boxes, software licenses, gym memberships you don't use. Each one seems trivial in isolation. $10 here, $15 there, maybe $30 for the premium tier. Individually, they're barely noticeable. But add them together, and you're looking at hundreds of dollars every month disappearing into services you consume passively or don't consume at all. Most people can't even name all their active subscriptions without checking their bank statements. That's how invisible they've become. Here's how it happens. You sign up for a free trial. It's easy, convenient, no commitment. You give your payment information just to access the trial. The trial ends, and the subscription auto-renews. Maybe you meant to cancel and forgot. Maybe you figured you'd use it enough to justify keeping it. Maybe you didn't even notice the charge because it's small and buried among other transactions. Months pass. You rarely use the service, but you keep paying for it. The company counts on this. Their entire business model depends on people forgetting, not bothering to cancel, or underestimating how much these small amounts add up. Now consider convenience fees, delivery charges, service fees, processing fees, convenience surcharges. You order food delivery instead of cooking or picking it up yourself. The meal costs $20, but with delivery fee, service charge, and tip, it's $35. You do this twice a week. That's an extra $120 a month just for convenience. You use a payment app that charges a small fee for instant transfers. You pay bills through services that add processing charges. Each transaction feels insignificant, but they accumulate into a substantial monthly leak that produces zero value beyond immediate convenience. Let's talk about the coffee shop habit. $5 for a coffee doesn't sound like much. It's a small pleasure, a daily ritual, something you look forward to. But $5 a day, 5 days a week, is $100 a month, $1,200 a year. Over 10 years, that's $12,000 spent on coffee. Not on financial security, not on investments, not on experiences that matter, on coffee. And this isn't about depriving yourself of every small joy. It's about recognizing the cost and deciding consciously whether it's worth the trade-off. Most people never make that decision. They just keep buying the coffee, oblivious to the long-term drain. Here's another leak: late fees and interest charges. You forget to pay a bill on time. $25 late fee. You carry a small credit card balance, thinking you'll pay it off soon. Interest accrues. You overdraft your checking account by a few dollars because you weren't tracking closely. $35 overdraft fee. These aren't planned expenses. They're penalties for inattention, for lack of systems, for operating reactively instead of proactively. They serve no purpose except to transfer your money to institutions because you weren't careful. And they happen repeatedly because the underlying behavior, disorganization, avoidance, lack of tracking, doesn't change. Let's address the upgrade trap. Your phone works fine, but a new model comes out. The monthly payment is only a little more. You upgrade. Your internet plan is sufficient, but the company offers a faster speed for an extra $15 a month. You take it even though you don't need it. Your car is reliable, but you see a slightly newer model with features you want. The monthly payment increase is manageable, so you do it. Each upgrade feels small, reasonable, justified, but collectively, They inflate your fixed costs, leaving less room in your budget for anything else. You've traded financial flexibility for marginal improvements you barely notice after the first few weeks. Here's a leak most people don't even recognize: buying in small quantities. You run out of something, so you grab it at the convenience store or pharmacy. It's more expensive than buying in bulk at a grocery store, but it's convenient and you need it now. This happens multiple times a week. Toiletries, snacks, household items, all purchased in small, expensive increments because there's no planning, no system. The cost difference seems minor per item, but over a month it's significant. You're paying a convenience tax repeatedly, and it's bleeding money that could be saved by simply planning ahead. Let's talk about the guilt-driven spending. You feel bad saying no to fundraisers, tip jars, donation requests, social obligations that come with a cost. $5 here, $10 there, $20 for the group gift you weren't consulted about but are expected to contribute to. Each instance feels harmless, even virtuous. But when it happens constantly, it's a drain. You're funding everyone else's priorities while neglecting your own financial health. Saying no feels uncomfortable, so you say yes, and your money evaporates in the name of politeness. Another insidious leak: impulse purchases under $20. A magazine at the checkout, a cheap gadget online, a clearance item you don't need, but it's so cheap you can't resist. These purchases don't register as significant. You don't budget for them. You don't track them, but do this 3 times a week, and that's over $300 a year on random stuff you forget about almost immediately. It's death by 1,000 cuts, and because each cut is small, you never stop the bleeding. Consider the cost of disorganization. You buy duplicates of things you already own because you can't find them or forgot you had them. You pay for storage units to hold stuff you don't use. You lose receipts and miss return windows, eating the cost of items you decided you didn't want. You forget to use gift cards, leaving money on the table. You miss out on rebates because you don't submit the paperwork. Each of these is a small loss, but together they represent money that simply disappears due to lack of systems and attention. Let's examine the vending machine, parking meter, toll, ATM fee category. $2 for a snack, $3 for parking, $1.50 in tolls, $3 for using an out-of-network ATM. These microtransactions seem too small to matter, so you don't think about them. But if you're making these types of purchases multiple times a week, you're looking at $40 to $60 a month that you'd struggle to account for if someone asked where your money went. It's invisible spending operating completely under your conscious radar. Here's a painful one: the cost of poor health habits. Smoking, excessive alcohol, junk food, energy drinks. Beyond the obvious health consequences, these are expensive habits. A pack-a-day smoker spends thousands of dollars a year. Regular drinking adds up quickly. Daily junk food and energy drinks cost more than whole food and coffee you make yourself. These aren't just leaks, they're floods. But because they're habitual and emotionally tied to stress relief or pleasure, people defend them and never calculate the true cost. Let's talk about the inefficiency leak. You waste food because you don't meal plan or use leftovers. You leave lights on, run appliances inefficiently, don't maintain your car properly so it consumes more fuel and breaks down more often. You don't compare prices on recurring bills like insurance or utilities, so you pay more than you need to. These aren't flashy expenses. They're boring, mundane inefficiencies that cost money simply because you're not paying attention or can't be bothered to optimize. Now the digital trap: in-app purchases, game currency, extra lives, premium features and free apps. $1 here, $3 there. It's digital, so it doesn't feel real. There's no physical exchange, no tangible product, just a button press and a tiny dopamine hit. But these charges hit your real bank account. Over time, people spend hundreds or even thousands on digital content that has no lasting value, that disappears when the app shuts down or they lose interest. It's one of the most efficient ways to extract money from people who don't notice small charges. Here's the social spending leak: trying to keep up with friends or colleagues who have different financial situations, going to restaurants you can't afford, taking trips that stretch your budget, buying rounds of drinks, contributing to expensive group activities. You do it to belong, to not feel left out, to maintain relationships. But if it's bleeding you financially, it's not sustainable. Real relationships don't require you to bankrupt yourself. If maintaining the friendship costs more than you can afford, something needs to change, either the activities or the friendship. Let's address the treat yourself mentality. You had a hard day, so you deserve something nice. You hit a small milestone, so you reward yourself with a purchase. You're stressed, so you buy something to feel better. This happens multiple times a week. Each treat is individually justified, but collectively they form a pattern of using spending as emotional regulation. That's expensive therapy that doesn't actually solve the underlying issues. The stress returns. The hard days keep coming and you keep spending, creating a cycle where emotional discomfort leads to financial damage. Another leak: paying for speed or convenience when time isn't actually scarce. Expedited shipping when standard would arrive in time. Premium gas when your car doesn't require it. Pre-cut vegetables when you have time to chop. Bottled water when tap is fine. These expenses exist because companies profit from convincing you that your time is too valuable for the default option, even when it isn't. The convenience premium is real and most people pay it reflexively without evaluating whether the benefit justifies the cost. Here's the maintenance neglect leak. You skip routine maintenance because it costs money now, then pay exponentially more later when things break. Skipping dental cleanings leads to expensive procedures. Ignoring car maintenance leads to major repairs. Not maintaining your home leads to costly fixes. The leak isn't the initial maintenance cost. It's the much larger cost you incur by avoiding it. This is short-term thinking creating long-term financial damage. Let's talk about the comparison shopping failure. You buy the first option you see instead of spending 10 minutes comparing prices. You renew your insurance automatically without shopping around. You stick with your current service provider, even though competitors offer better rates. This laziness, or time scarcity, has a real cost. Over a year, failing to comparison shop can cost hundreds or thousands in unnecessarily high prices. The time investment to compare is minimal. The financial return is significant, but most people don't do it. Now the emotional spending as identity. You buy things that reflect who you think you should be rather than who you are. Workout gear you never use because you imagine yourself as someone who exercises regularly. Cooking gadgets for the person you wish you were who makes elaborate meals. Books you'll never read. Craft supplies for projects you'll never start. These purchases are about aspiration, not reality, and they're expensive. You're funding a fictional version of yourself while the real you struggles financially. Here's a brutal truth. Most of these leaks are completely preventable. They don't require more income. They require awareness, systems, and discipline. You need to know where every dollar goes. You need to review subscriptions quarterly and cancel what you don't use. You need to track small expenses, not just large ones. You need to create friction between impulse and action. You need to plan purchases instead of reacting to desires. You need to optimize recurring expenses. You need to align spending with genuine priorities rather than convenience or emotion. The antidote starts with a spending audit. Track every single expense for 30 days. Every coffee, every fee, every subscription, every impulse purchase. No judgment, just data. At the end of 30 days, categorize it. You'll be shocked by where money is going. Things you thought were minor will total hundreds of dollars. Patterns you didn't know existed will become obvious. This visibility is the first step to stopping the bleed. Next, eliminate subscriptions ruthlessly. If you haven't used it in the past month, cancel it. If you wouldn't enthusiastically resubscribe today at full price, cancel it. If you're keeping it just in case, cancel it. You can always resubscribe if you genuinely miss it, but most of the time you won't. This single action can free up $100 to $300 a month for most people. Third, create rules for impulse spending. Nothing under $20 gets purchased without a 24-hour waiting period. Nothing over $50 without a week. This delay breaks the emotional urgency and lets rational thinking surface. Most impulse purchase desires fade quickly when you're forced to wait. Fourth, automate your savings. If money sits in your checking account, it will get spent. The leaks will find it. Move savings automatically to a separate account the moment you get paid, before you have a chance to spend it. Pay yourself first. What remains is what you budget with. This protects your financial goals from the invisible drain of small expenses. Fifth, review and optimize recurring bills annually. Call your insurance company, internet provider, phone service, utilities. Ask for better rates. Shop competitors. Negotiate. Companies count on customer inertia. Active customers get better deals. This takes time but pays off significantly. Sixth, address the emotional and behavioral roots of leaky spending. If you're using purchases to manage stress, find healthier coping mechanisms. If you're spending to fit in socially, evaluate those relationships honestly. If disorganization is causing fees and waste, build systems. The surface fixes won't hold if the underlying behavior doesn't change. Here's what happens when you plug the leaks. Money starts accumulating. Not because you earned more, not because you got lucky, but because you stopped the constant drain. That accumulation creates options. Emergency funds become possible. Debt payoff accelerates. Investments start. The financial pressure eases. It's not dramatic or exciting. It's gradual and boring. But it's real, and it works. The invisible leaks are costing you far more than you realize. Not just the money itself, but the opportunity cost of what that money could have done for you. The financial security you can't build, the stress you can't escape, the goals you can't pursue, all because hundreds or thousands of dollars a year are silently flowing out of your life through expenses you barely notice. Are you going to keep letting it happen, or are you going to stop the bleed?